If you are persistent, you will get it. If you are consistent, you will keep it. That's what we do here is we help you both get it and then learn to keep it every day. 10 to 15 minutes is all we ask every day that the market is open. Don't ask you to spend more time than that because you'll just be wasting it. You need to consistently be with us 10 to 15 minutes a day following these charts day in and day out, and you will understand this. And you might say, can it be as simple as you lay it out to be? And I can tell you only that it works for me, and it works quite well. And again, is there anything complicated about what we talk about day in and day out? Gave somebody the example the other day. They were saying, well, if it were as simple as these charts look and make it when to get in, when to get out, why doesn't everybody do this? Well, the large majority of Americans are overweight. We know it's unhealthy. We know it's not wise, but people overeat even though they know better. And they develop all sorts of diet-related problems, from arthritis to diabetes to heart disease, you name it. But they still do it. Why? They know better, but they don't do it. Here, we know when you stay with us long enough and you start tracking these things on a daily basis, you quickly learn that you can follow this. You can learn to trend follow. We're not talking about trying to day trade and trade on inefficiencies in the market and find a nickel or a quarter here, a dollar there. We're talking about grabbing the chunk out of the middle on these big moves on our weekly vertical crossovers. And they seem to work. Well, they don't seem to work. You can see that they work time and time and time. Again, we want you to practice with us. Practice trade for weeks, months, however long it takes for you to use what we teach and what you learn everywhere else to master this. You can do it. It requires persistence. And then as long as you stay consistent, you'll be able to recall, keep what it is that you learn. Let's jump into these charts. We see that we are going into our second week of down movement. S&P 500 down for the day, 0.25%. The big downer, of course, was the NASDAQ 100. The tech stocks down 2.20%. At the end of the day, it was down actually more than that during the day. So let's start first, and we've got some great news on bonds and gold. We'll get to that in a minute. So what do we see going on? We look at the weekly chart. Remember, always look at the biggest chart first. And what do we see happening on this biggest chart? We see an acceleration in the down move of the derivative oscillator. We see the red line, the red box getting bigger. We see the price percent oscillator also stroking down quite nicely. Nice first day of this latest weekly candle is a good size red down candle. It's just one day of a 5-day candle, but it's starting off the week nice and strong for continued down movement. Those of you might say, what is this guy talking about? How can anybody ever do anything worthwhile with the market going down? Well, there's something. If you track SPY, the S&P 500, there's the inverse of the S&P 500. That is called the ProShare Short S&P 500. Just a simple 1-to-1 inverse, and look at that. It goes up when the S&P goes down. And it goes up, the way it's set up is to percentage track it. It's much cheaper than the S&P 500, but again, it goes up by percent, the same amount that the S&P goes down. Now, we'll leave the weekly chart. We'll go to the 2-day chart. What do we see there? Again, strong down movement. We saw that the prior candle ended on Friday, so this is just the first day of the latest 2-day candle. It will finish drawing at the close of the market on Tuesday. We don't call a candle until it's drawn, but we do see that it is forming up to be a nice strong down candle, pushing well below the prior one, well below the 2-day trend line. Price percent oscillator heading down, derivative oscillator gaining downward momentum. What does the 4-hour chart tell us? Well, Down in the morning, further down in the afternoon, derivative oscillator gaining downward momentum, price percent oscillator heading down. So again, looking pretty nice. Saw down movement in the morning, like we said, and the afternoon. Price movements well below the 2-day, well below the weekly, folks. That's where we are on the S&P 500. If you jumped into that after the market started moving down on Tuesday afternoon last week. Remember, market was closed for Memorial Day weekend on Monday. The jumping in point was in the afternoon. And of course, it's done quite well for you on something like an inverse trade on SH. And remember, you can always just pull out of the market in your practice trade, wait for the S&P 500 to bottom out, buy back in when it goes up. You don't have to short, but don't take the loss. When anybody says you can't track the market, you can't follow a trend, folks, if you follow us every day, you learn very quickly that they are just wrong. It's not that hard if you had a chart and you knew how to read it. Let's keep moving through. You don't believe me? Stay with us. Stay with us a month. Stay with us 2 months. Stay with us a week sometime. I mean, you can look at these charts and see that they are accurate and they work and they're simple. That's what it's all about. Keep it simple, stupid. Okay, let's go to, or simple and straightforward. Not nearly as offensive, is it? I like that. Let's go to the Qs. What do we see going on there? Down for the day, 2.20%. We look at the weekly chart going into the second week of strong down up moves. Big candles already formed. The biggest one we've seen so far, price percent oscillator stroking down, derivative oscillator gaining lots of downward momentum. Oh, by the way, as we go to the 2-day chart on the Qs, if you are a Patreon member, don't forget Wednesday afternoon, the 5th at 5:30. Gosh, forgive me. Wednesday afternoon, the 5th at 12:30 Eastern Daylight Time. We're going to have our call in for everyone. Same number we use for our Patreon supporters. I will send that out again tonight. Make sure all the Patreon supporters have it. If you have specific questions you'd like me to know about, I'd love to have them so I can do a little research if necessary. Answer those for our call in. Usually ranges about 30 minutes or so. All of our Patreon members at any level are invited. Also encourage Patreon members to go ahead and send me the stocks and ETFs they would like to have reviewed. We'll make sure that we get that done for you in the next few days also. But that call in is for all of our Patreon members. If you're not a Patreon supporter and want to be one, go ahead and sign up. Follow the link in any of the show notes attached to the videos, audio, wherever you might be, iTunes, YouTube, Facebook, wherever. We appreciate you guys being with us. Don't forget, the book, Charting Your Way to Wealth, is available. We have an autographed copy ready to ship out to you. You'll see the link for that in the show notes. Also, 2-day chart. Look how beautiful this down movement is, connecting so many candles. First day of the latest 2-day candle, strong down movement, price percent oscillators fat, derivative oscillators kicking over, heading down even stronger. We go to the 4-hour chart. Down movement in the morning, even more down movement in the afternoon. Just beautiful as we see things tanking on the Qs. Of course, my practice trade has been in PSQ, and it has done wonderfully well for me. Actually spiked up today as high as $31.32. And again, the cost of PSQ much lower than the cost of QQQ, but like I said, you buy more shares because it moves up at the same percentage that the Qs moves down. It's an inverse fund. So again, just another little way that you can add a little bit of sophistication as the market starts to crash. You don't have to. You can, of course, just get out if you're in QQQ, but you don't have to. And again, isn't it gorgeous? So that's where we are on the Qs. Our trade is just continuing to move. I hope you jumped into a practice trade with us in the afternoon last Tuesday when all this down movement started, and you have been racking up a profitable virtual trade. And the reason I say virtual trade is we're not a stock calling service. We're an education firm. We do not Again, we do not give market advice. We go to TLT, 20-year bonds. What do we see going on there? Well, again, started the week off with a bang, up 0.46%. Derivative oscillator climbing, price percent oscillator heading up. Second week of above the Bollinger Band up movement on 20-year bonds. Just beautiful. Go to the 2-day chart. Again, what is that? We now have going into the fourth candle of movement above the Bollinger Band as bonds just fly up, up, up as the market goes down, down, down. Again, there's always a bull market somewhere, like Jim Cramer says. Price percent oscillator heading up, derivative oscillator heading up. We go to that 4-hour chart, and of course we can talk about our jumping in point on bonds. If you recall, waited for that pullback to end. Bonds crossed over in the morning on Thursday the 23rd. Jumping in point was Thursday afternoon, somewhere around 126.65, and of course a high since just the 23rd. I mean, again, not even 2 weeks, my friends, a high of 132.58. In anybody's book, is that beautiful? You're darn right it's beautiful. And how do you do this? You follow the trends. How long do you stay in? When you're satisfied with your profits or you start seeing the indicators on the bigger charts flaking out on you. This is beautiful. I mean, passbook savings accounts, what, not even earning you 8%? What do you get on CDs? I mean, again, practice trade with us. Learn how this works. Buy the book. It's wonderful. And this is not complicated. It's common sense, my friends. What I've been preaching for years here. That's why so many thousands of you pay attention and follow this and send me wonderful emails and post great things on our YouTube channel and all. Because no BS here, just talking about facts. You can do this. You can do this. Lastly, we go back to the weekly chart and we had one chart that hadn't set up for us yet, right? Gold looks like it may be moving that way. Of course, we had that weekly vertical crossover in gold. We had a nice down trade for a while on gold. And then what do we see happening now? Gold turning over. First day of the week. Now again, it could change before the week's out, but looks like we might be going into a weekly vertical crossover. That won't be confirmed until the candle's drawn, which would be close of business on Friday. However, derivative oscillators flipped over positive. Price percent oscillators looking quite positive. Nice big up candle. Now again, don't get greedy. Don't start jumping in right now too early because this could pull back on you and you could take a loss. So we'll just wait. We'll just be patient, see what there is to see. But we do see nice strong up movement starting the week off. First day of this latest 2-day candle bounding up above the Bollinger Band, just shooting up, which is quite nice. Gold up 1.44%. Derivative oscillator, price percent oscillator heading up. First day of the latest 2-day candle. 4-hour chart. Look at that. Just stair steps walking up. 4 above the Bollinger Bands. 2 days of strong up movement in gold. So we'll see how long that sustains. And if by the end of the week we might have a weekly vertical crossover and we might have a jumping in point next Monday on gold. We'll wait. We will see. Folks, is this not beautiful? And remember just a couple of weeks ago when nothing was sorting out, markets were in flux, there was nothing to trade, and I kept saying, be patient, friends. Be patient, friends. Be patient, friends. There's a reason, because we know that things do sort themselves out, and when they do, it's virtual money-making time. And that's what we're in the process of right now, successful virtual trades. I so appreciate you being with us. Let me tell you what I have been doing over the last week or so. I've started writing a new book for you. Now, it's going to be a sequel to our first book, Charting Your Way to Wealth. If you don't have that book, go ahead and order it. Want you to have that. It sets you up for our next book, Optionable Wealth. And it's going to be about options. It's also going to be about plans. Whether you're like me and you've got a great deal of money that you want to simply see it continue to grow. Or if you're someone just starting out and you want to help earn a lot of money. while you're perhaps putting money back too, and you want to grow your fortune, whichever case you may fall into, starting off or moving along or some point in between. We're going to really focus on techniques you can employ to help you do all of those things, using our methods, using the kind of theories and the kind of techniques that we put together with our trend following. We know that the future is very uncertain with zero interest rates, perhaps negative interest rates, all sorts of crazy things that might be coming in the future, along with the stock market crash. So it behooves all of us to be ready for these contingencies. Being, pre-armed is being well prepared, and we want to be well prepared. Forewarned is forearmed. We want to make sure that we are ready for whatever might befall us in the future, and that requires us to be nimble and liquid. And that's what we are going to be teaching in the new book, along with all sorts of just cool updates on what we do, going to help you understand entry points, exit points, all sorts of ways, and of course, how we employ options, both puts and calls and covered calls, how you can actually create your own printing press for money for stocks that you might have in your portfolio that you don't ever want to sell. You just want to collect a dividend on, but you don't want to lose value. Way to use covered calls and all sorts of other techniques to make sure that you're able to pump those stocks and still make money as markets adjust. So all sorts of interesting stuff. I'm truly enjoying writing this for you. Can't wait to get it out to you. In the meantime, if you don't have the book Charting Your Way to Wealth, you need to have it. If you're not a Patreon supporter, show a little love our way if we've been helping you. Spend a lot of time and energy on this. There's a lot of costs associated with the bandwidth and the texting service, the email services, the website, the site managers, all that stuff. So help us out. My friends, we appreciate you. We know you appreciate us. We thank you. We love to hear from you. CW@chartingwealth.com. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.